But as far as, capital raising, it's all about your connections. You need to know these people. They need to know, like, and trust you.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I'm excited to have Mike Roeder. Mike, how are you doing today?
Doing very well. And thanks for having me on, Todd. I appreciate it.
Well, I am happy to have you on, and we've known each other for a little while here. So I wanted to get you on the show and make sure we can gain some valuable nuggets from you. So a little bit about Mike. He is one of the partners at Granite Towers Equity Group. And they have been buying multifamily properties for quite some time now, since investors since 2009, and focused on acquiring assets and multifamily projects in strong markets, mostly in Texas, but some stuff in Minnesota as well. And let's see. I mean, you got a lot of deals. You've got a lot of great experience, and so let's dive in.
Definitely, let's do it.
Dive in, yeah. So, what was your life prior to real estate, prior to multifamily?
Yeah, life prior to real estate. I've been in the insurance industry for 12 years, basically ever since I got out of college. Was a sales producer for high net worth clients. And while I was doing that, I started picking up some single family rental properties in central Minnesota. Grew up in St. Cloud. And that's what, really gave me the real estate bug. I love the cash flow. I actually house hacked my first house, rented out 3 of the bedrooms. My now wife and I lived in the other one. And then we just kind of, progressed from there.
Yeah. Yeah. So that's what it was. It was like, hey, I like these real estate properties. Were you able to replace your income? Did you replace your income with just the single families, or when was it like, this is a real thing?
Yeah. So it took me a while to replace my income. Like you had mentioned, in 2009, that's when we started, basically in the single family rental space. And it wasn't until I acquired a couple of multifamily assets that I really replaced my income. Obviously with single families, it takes a long time. You got to accumulate a lot of assets, and a lot of time and energy goes into every single one of those transactions. So, along the way, I just really questioned, how could I scale my business quicker and easier? And that's kind of when I fell into multifamily and started acquiring multifamily assets.
What are some of the things you did to help you scale quicker? Like, what are some of the action steps you took, or some of the things that you changed to help you scale your business?
Great question. So back to the start, when I jumped from single family to multifamily, I partnered up with my now business partner, Dan, and he had bought, I think 3 or 4 different apartment complexes ranging anywhere from 9 units up to 30 units. And so that really allowed me to feel comfortable in jumping into the multifamily space, because I really had no idea what I was doing. I'd done a little bit of research, read some books, and listened to some podcasts.
Yeah.
But that allowed me to feel comfortable jumping into the multifamily space. And then fast forward a couple years after that, we had bought a 20 unit together, bought an 8 unit together. We decided that we wanted to start syndicating projects, so raising capital from passive investors to really allow us to scale even quicker. And so at that time, we found a mentor down in Dallas, Fort Worth, that had thousands and thousands of units, and really gained insight and knowledge from him and his team in order for us to really scale quicker.
Okay. So hiring a mentor and then forming that partnership are 2 pretty critical things.
Exactly. 100% critical.
Nice.
And I'm sure, I could have done it on my own, but the mistakes that you'd make along the way, and the time that it would take to scale to where we are today, I think would have taken probably 2 or 3 times the amount of time.
Yeah. And what did hiring a mentor, and I don't want to make this all about the mentor because that's not what it's about, but did hiring a mentor, do you think it helped you obviously learn What was the most valuable thing? Was it the education you got? Was it the confidence you got? Was it the mindset shift that you got?
Gosh, the most important thing, I mean, I do think the educational was critical. The way that we were buying, it wasn't a bad way, but basically we were doing all of our rehab projects out of our cash flow. Things were moving very slowly. And we were basically taught a whole different, mentality where you come in, you fund everything, you put all of those CapEx projects to rest right away and really boost, the income right off the bat. And there was a lot of other, items that we learned along the way, through that program as well. The other thing that was really important was when we stepped into the space of syndication is the networking opportunities. Just being able to comfortably raise the capital that we needed to raise. And that really helped out with that.
What are some key takeaways for raising capital? How do you raise? What was the most recent? I shouldn't say what was the larger raise that you've done recently? It doesn't have to be the largest, but what's a recent raise that you've done?
Yeah, recent raise. We're just wrapping up a $10 million raise. And then
Okay.
before that, we did a $16 million raise. And we didn't start out there. Our first syndication, we raised, about $600,000. So, we've tiered up over time.
Yeah.
But as far as, capital raising, it's all about your connections. You need to know these people. They need to know, like, and trust you. So the more that you can stay in front of, your passive investors or your limited partners, the better. And you want to, just build a very strong reputation as you go throughout your career.
So what are you guys doing specifically? Is there certain things, thought leadership program? Like what are you guys doing to bring on new investors?
Yeah, right now we have a few different avenues. So, our main avenue is just personally networking ourselves. So we go to a lot of meetups, we go to a lot of events, down in Dallas, Fort Worth, kind of across the country. Up here in Minneapolis, we'll do some events as well. So that helps out a ton. Now that we've been doing it, I've been investing for over a decade. We do receive a lot of referrals. We've also have some strong connections with CPA firms, family offices, you name it. And then we do have our own podcast. So we have, a podcast that we're about 30 episodes into. Recently wrote an ebook about passive investing. So there's just all kinds of different avenues that you can take.
Is there anything that you find to be the most helpful? Like where do you get the most bang for your buck?
So for us, it's definitely networking. So it's going to these different events and seminars and meetups, and just meeting new individuals and staying in front of them.
Mostly real estate events, or is it what kind of events?
Correct. All real estate events. Yeah.
Okay.
Exactly.
Okay. Any tips? A lot of people go to these events and they don't get anything out of them. Like what do you do to get something out of them?
Yeah. So we're meeting, new investors at these events, and just make sure that you get their contact information. Each person that you speak to, whether or not they have a business card, make sure to jot down their contact information, start a database, and then, again, stay in front of those potential investors. So whether that be, a monthly or a quarterly newsletter, make sure that they're seeing your deal flow or the deals that you have in the works. And just, make sure that they're getting your information on a regular basis.
Yeah. Yeah. I think one of the things I really like the most with growing my investor database is actually getting to know them face to face. I feel like when I look at who invests in my deals, certainly there's people that have heard me on a podcast and have never met me, but the large majority of people that are investing in my deals, I've had a conversation with face to face. I've shaken their hand. I've had coffee with them. Whatever it is, we've met at least one time face to face. Hey, I met you at this real estate conference. I'd love to invest in your next deal. I get that a lot versus, I met you on a podcast. Now I get that, but most of the time we've also met face to face.
Yep. And I couldn't agree more, Todd. I mean, the majority of our investors are people that, we've probably met, a couple of times, multiple events, or, we've had those conversations afterwards. And, another great way to really build out these connections is after you meet someone at a meetup or a real estate event, send them, a Calendly link or some sort of link where you can jump onto a Zoom meeting and actually have a 15 to 20 minute conversation and really get to know each other.
Yeah.
And that's just going to further your relationship and, make it that more beneficial.
Yeah. Couldn't agree more. What's a mistake that you've made that you've learned from that you can share with our audience?
Yeah, a mistake that I've made, I'll mention a couple. So, first off, like I had mentioned, one of our first apartment complexes that we bought, it was a 20 unit. We basically did all the rehab projects out of the cash flow. So I would never do that again. Make sure that you come in well funded. Another mistake, and it can go either way here, but the markets that we've invested in. We have one project right now that's been hit very, very hard by COVID-19 and the oil downturn, and it's in an oil market. It's out in Carlsbad, New Mexico, and I think we will do very well on that project eventually. But we are definitely more selective nowadays on what markets that we're investing in. We want to make sure that we're in markets that have diverse employment, that have really good job growth, that are landlord friendly, and then have a good high median household income in the 1 mile radius of the property, so that way the tenants can afford the rent.
Yep. You're buying in super competitive markets. You're buying in Texas and
Yep.
some of the tertiary markets, but also it sounds like Dallas and some of the bigger markets, right? How are you getting these deals? Super competitive there. How are you getting these deals? What are you doing to stand apart to get attracted to get these deals?
Yeah, good question. So, you as well as myself know that it's a relationship business. So it's all about the relationships that you have in place. So Dan and I have spent countless hours and days and weeks on building out these relationships with selling brokers in these markets. Because when you look at these larger assets, 100 to 500 units, the majority of them are being listed through selling brokers. These are sophisticated individuals. Now, sure, you can pick off some off-market properties every once in a while, but I would say probably 4 out of 5 assets that we buy are on market listed by a broker. So typically when we fly into a market, say we're down in DFW every 2-3 weeks, we'll try to meet up with a few brokers, take them out to lunch, meet up at their office, tour some of their deals, and really get to know them on a personal level. And luckily we're younger guys, we're very active, and a lot of the brokers down in DFW are younger and have some of the same interests as us. So we've taken people out wake surfing, we went out to Colorado snowboarding with some of the individuals, and just built phenomenal relationships with these guys. So that's really, really helped us quite substantially.
Yeah, I think that's really cool. Building actual relationships with them too, outside of just asking them for a deal.
Yep.
Can add it. That's even more valuable because they, people are people. They want to help people that they like, that they trust, and when you're actually friends with these people, actually getting to know them, they're going to feel that they want to get you a deal.
Exactly.
And when it is a competitive market, and they might not slide you every single pocket listing they have, and you might still have to go through the competitive bid process. But when you are in the running, even though your offer might not be the highest, they're going, hey, seller, you really should look at this offer. These guys are true. They will close on this deal. I know them well, versus this other crew that came from who knows where, and I don't have any inkling if they can close or not.
Exactly. And that certainty of close is so important, especially when you get to these larger assets. I mean, if someone's a few $100,000 below, on an offer price, I mean, if they're certain that you can close and they're not certain on the other buyer, it's probably pretty likely that they might choose you.
Well, look, it's expensive. It's time consuming to close on a property, to spend all that time and effort. And I just sold 2 buildings. I would not sell to those same buyers again.
Mm-hmm. Yep. Exactly. And we went through the same situation where, we've either sold an asset or we've had an asset under contract and the buyer's backed out.
Yep.
And, that puts a very sour taste in your mouth. I mean, you're taking up the management company's time, you're taking up your time, you're spending dollars on attorney's fees, you're basically getting, these buyers into all the units. So you're upsetting possibly some of the tenants. So it's a big deal when you have someone back out. It really is.
Yeah. And I think by you being in the market, have already closed, you've closed on deals before, you've shown you can perform and you're not a pain in the butt. That probably helps you as well, right?
Correct. Exactly. And when you go through these transactions, you want to make it as easy as possible. And obviously, sometimes issues arise where, maybe there was a massive foundation issue or, something really, really big that you might have to retrade on, but you want to make it as seamless as possible with these sellers.
Yeah. Yeah. For someone new trying to get into the business, I talk to so many people that want to do multifamily invest and they want to buy 100, 200 unit building.
Mm-hmm.
What's like one or two things that you feel like they should or could do to get involved quicker, to get started earlier?
So I would say number one, if you can afford it, try to hire on a mentor, someone that you can really learn from and really build off of their track record. If that's not feasible, try to go out there and try to provide some value to a larger investor that's done multiple deals. And even if that's, offering your services for no compensation, it's going to be well worth it because you're going to learn a ton. We've had quite a few investors that are newer to the game that just say, hey, can we be your boots on the ground? Can we do this? We're not looking for any compensation. We just want to learn from what you're doing. So I think that can be massive for people that are looking to get into the industry. And it might take a year or two before you land your first deal, but as long as you're taking those baby steps every day, you're going to make progress.
Yep. Yep. No, good, great advice. I couldn't agree more. What's a way you guys like to give back or you like to give back?
Yeah, so a certain percentage of our profits at Granite Towers Equity Group, we go give back to, it used to be called Sheridan Story. Now it's called Every Meal. And so basically it provides food to school-aged children where there's food gaps. So maybe they don't have enough food on the weekends or in the evenings. So they provide that through the actual school. And then we also give back to another organization that fights sex trafficking as well. So those are two things that we do. And then, we help a lot of other investors that are looking into the game to get into the game. So whether that be a phone call or an email, just trying to assist them throughout the process.
So you met your partner and you guys now are doing business together. Anything that you can think of that like key things when you're looking for were you actively looking for a partner?
So I was not. I really got very lucky. Fell into this partnership. Dan and myself, we were great friends throughout high school. He'd been buying apartments. I'd been buying single family. And we basically went together and said, hey, let's buy a deal together. Let's see how it goes. So we bought a 20 unit together, bought an 8 unit together. And we pretty much knew that we were going to continue on and do every single deal in the future together. But I would say, if you are looking for a business partner, make sure that you select someone that, basically has maybe different strengths or that can really, when the two of you combine, you have much more than if just one of you was going alone.
Yeah, definitely. All right. So last two questions before we wrap up. What's a favorite book that you can recommend to our listeners? Real estate, business. What's a favorite book?
Yeah. So I would say for the beginning investor out there, the ABCs of Real Estate Investing by Ken McElroy. Really good book. I mean, it just takes you through everything, as far as a syndication goes. Also the ABCs of Property Management. I mean, phenomenal book. And even if you're not going to be a property manager, you're not going to have your own property management firm. Yeah. It's just good to know all the insights before you actually get into the industry. So I would strongly
ask some good questions too.
Exactly. It really does. And I mean, truthfully, I probably listen to that, maybe once or twice a year, and you always take out little golden nuggets from it.
Yeah.
And yeah, I mean, as far as podcasts, I think podcasts are just a fantastic way to grow a wealth of knowledge as well. I mean, you do a great job, Todd. We have one, and there's just countless podcasts out there as well.
Yeah, I agree. Podcasts have been amazing as far as learning. Just you can learn so much from them in such a short period of time and be inspired at the same time. You're hearing
Right.
people. I mean, it's amazing to talk to people. I just had a gentleman on that, had done, he literally started basically researching multifamily and getting excited about it in November. And now he's closed on, over 150 units.
Wow.
And it's like, wow, that's amazing. And he's working a full-time job. And so
Yeah.
it's amazing how many people you can talk to that are doing awesome things like yourself. And you can take, just like you said, with the management book, you take just these little golden nuggets out of each episode, out of each book, and you can apply it to your life. The key is to apply it, right?
Exactly. Apply it. And that's, one thing that I do is I've, my notepad on my iPhone, and every time you're listening to a podcast, if you hear something that stands out, jot it down in your notes and then go over those notes on a regular basis. Because otherwise, a lot of these little golden nuggets you might forget, but if you're reviewing them, man, it can make a difference.
And you go, oh man, I made that mistake, but I remember I heard that. Oh shoot, I wish I would have written it down.
Exactly.
Last question. What are your 3 pillars of wealth creation?
Yeah, my 3 pillars of wealth creation would be, obviously real estate is the biggest one, multifamily assets. Another pillar, gosh, might have to redo this one. So are you talking about 3 pillars of cash flow essentially, or?
No, 3 pillars of wealth creation. However you define wealth, whatever you think of wealth, whether it's
okay, got it.
Deeper, but whatever you think of it, what are your?
I see what you mean. Yep. Okay. Sounds good. Let me retry this. All right. So my 3 pillars of wealth creation would be, number 1, financial freedom. So just having the flexibility to do what you want, when you want, and to have the funds to do them. Number 2 would be time, just to have the time to spend with family, friends, those close to you. And then number 3 would be giving back, giving back to the community or organizations. I think that's extremely important as well.
I have been finding the more I give, the more I've been getting, and it's, you've probably heard it before, but it's actually playing out in truth. And it hasn't been just like this last couple months. It's, over the last few years, the more I give, not only information and money and time, and it just, when you're in service, it's amazing the abundance that comes with it.
Completely agree.
So that's really cool. I love those 3 pillars. I love, what you've talked about so far in this episode, and I really appreciate you joining us on the show. How can our listeners learn more about you? Where can they find your podcast, all that kind of good stuff?
Definitely. So if you go to our website, it's Granite Towers Equity Group.com. We have a contact us page, a free ebook on passive investing, as well as all of our podcast episodes. So that's a great way to reach out to us. Or if you'd like, you can certainly email me as well. Email address is mike@granitetowersequitygroup.com.
Awesome. Well, Mike, appreciate it again. Thanks for joining us. A lot of good tidbits in here. So appreciate that. And man, you have a fantastic rest of the day.
Thanks so much, Todd. Really appreciate it. Had a blast.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to VentureD.com venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.